Hello, everyone, and welcome back. Welcome to Liquidation Day. I mean, Liberation Day, Liberation Day. I had to make this joke yet again. Welcome to, I think, episode 2024. Welcome to another therapy session with Jose and myself.
Yeah, this is I think the second therapy session we're doing in our time of live streaming, Neil. But yeah, pretty crazy red market today. How are you feeling, Neil?
I mean, I'm feeling good. I went out earlier today, touched some grass, saw the sun, saw the blue sky, so that's great. Then looked at the portfolio, not that great, but then again, we're here. So we're here, we're live, we're here to answer some questions, share our thoughts. So could be worse.
I mean, I don't know if you wanna if we wanna just kind of pull the bandage off and just show kind of like the heat map right now. I'm guessing pretty red. I haven't looked at the market since this morning. Um, okay, all right. I don't know why. I was expecting even redder than red.
Yeah, I mean, it's I think now some of the names got a little bit greener than at the start of the day. For example, I think Netflix is actually green today, which, to be honest, makes sense, right? Tariffs or no tariffs, you're still going to binge watch TV shows on Netflix. But yeah, it's always the same. Consumer non-durables are green. Some healthcare ones here are green. But of course, you've got the big tech companies that are still red. You've got Google that's down, Meta, Microsoft, Nvidia. Although, like I said, at the start of the day, they were all down more than this. I think Apple was down 9%, Nvidia 7 point something, 8. Same with Meta. Hopefully, us going live will not change the trajectory in case it was going to recover a little bit from the lows of today. But I mean, let's be honest, we've been streaming twice a week. And if we look back at those prices here, we've seen some of these prices already, right? We've seen some of these prices earlier in the week, earlier last week. Some of the names are going lower, of course, but some are just back to prices not seen since Monday.
Yeah, I mean, I was just looking at Nvidia, right? I think Nvidia right now 103. I think we did see kind of those prices earlier, or around there, right? On March 10th we saw about 106, and I'm I'm pretty sure these are closing prices. I think if we would have probably if I was to see kind of the hourly prices, there were some of the stocks that probably hit those levels during the day.
Yeah.
Um, so let's see. What are some questions that we would love to take right now? Um, we have Bass here. It could be worse, but it can still be down when retaliation news start. And that's the thing, right? I think the person kind of breaks it down. Um, the answer is we don't know. No one knows what happens from now, and uncertainty is what fuels the market, right? Uncertainty is not the market; it's what fuels volatility. And right now, many, I guess, were thinking that tariffs news would bring clarity, but it just brings more uncertainty. And I think it's just going to continue to bring more uncertainty. And I think we talked about it last episode. I believe this year is going to be the year of volatility, where every other day we're going to hear something that might be good. And then the other days we're going to hear something that's bad. So I'm expecting volatility to continue to be at these crazy levels.
And volatility should be your friend as a long-term investor. Of course, in the short term, it can go lower. We don't know. What's funny here is McDonald's is actually up 2% today. I guess
Which
big.
is wild because McDonald's just gets expensive nowadays. Like I don't know. Sometimes you can go in a meal and the one meal can cost you like $10+ here in the United States. At that point, might as well just go somewhere else.
Yeah, I don't want to touch. I mean, Jonathan here is pretty bearish on technology. He's pretty bullish on T-bills. I think we both would disagree very, very hard on this. I mean, are we going back to the Stone Ages, or are we going to continue the AI and technology wave? I think we're still going to continue and go with the technology wave and companies. Of course, in the short term, T-bills might be the play here, but I mean, I'm seeing a lot of great companies at good prices, and I'm not going to start buying T-bills just for the next 6 months when I can buy a Google for the next 10+ years.
Yeah, I mean, and the great thing about the market right now is we both could be right and we both could be wrong at the not at the exact same time. But if you look at it, I mean, Jonathan could be right that maybe in the short term you shouldn't um, touch stuff like this. But I believe in the long term we'll be fine. And I'm not someone trying to time here and trying to understand everything from how technology works, how macro works. I understand what I understand, and I invest in what I understand. And I will never kind of tell anybody what not to invest in. There's always a bullish opportunity somewhere in the market, right? If you want to be bullish in rocks and oils and whatever, feel free. I don't know that market, so I'm not gonna say anything. But I'm very bullish in technology. If I don't expect us to use less technology tomorrow than we are today. So while short-term prices can create some volatility, I think for my long-term thesis, I'm going to be pretty excited with my tech portfolio. I personally never heard of someone getting crazy returns on T-bills. I've heard plenty stories of people kind of getting amazing returns as a tech investor.
Yeah, and I mean, and even if we go lower, which is definitely a possibility, we can go lower. Lower can always go
Sorry,
lower.
Neil, I just want to, so yeah, we can see Jonathan's pretty much just talking about short term, not long term. I mean, I, it gets hard, right? Kind of thinking of what to do in the short term, Neo. But again, everybody has their own strength, and if maybe your strength is being able to invest in short term thesis, then that's all for you, right?
Yeah, I mean, if you want to be defensive short term, you can always just increase your cash. That could be a good short term defensive move. Plus, if you have those accounts where your cash position gets 4%, I guess that's a big plus. And then you can always use that cash to buy companies that are trading at good prices. Of course, again, short term, it can always go lower. Worst things can happen. Retaliatory tariffs could happen. Will it happen? I don't know. Remember, the US is the largest consumer on the planet. So if you think that something is going to hurt the US, you have to think that the other countries are going to get hit twice or maybe 5 times harder than the US in this whole tariff situation. So we'll see what happens. I mean, it's interesting times, but remember, I personally said that after April 2nd, we'll have less uncertainties, but it seems like we're going to have a bit more uncertainties, especially in the next couple of days, because you have the first deadline, I believe, April 5th for certain countries and certain sectors, and then you have April 9th, the big deadline. So you have a couple of days here and there to a week where the US and the other countries are going to be talking with each other, or as of today, you have a lot of leaders. It's like the small dog, right? The small dog next to the big ones. The small dog will always bark way more than the big dog. For example, you have Macron today saying, "Oh, we should stop investing in the United States." Like, okay, less baguette for Americans, I guess, because technically speaking, without American companies, I don't know how Europe would be looking like today.
Hey, Jose, are you? Why? Um, was I muted the whole time, Neil?
I unmuted you because I knew you didn't know, but I knew.
Did you mute? All right, thank you. Appreciate it. So, hey, Jose, why are you not selling all your portfolio? I mean, aren't we headed towards insane stagflation? Um, it, this is something that I don't know much about, Neil, the macroeconomics. I don't know how things impact in the short term. I do know it creates volatility. I do know it could create earnings um, hurdles for my companies. I would say it's very rare for many people here to know how these economy, how whatever's going to happen is going to do. I mean, you have analysts that are people who study this that just say could, should, maybe. They don't. No one gives a right response. So if people who study this don't even know what the actual action is, how can someone like me who doesn't study the financial economics and how macroeconomics give an understanding of what is going to happen to my portfolio in the short term of things? What I do know though, right, is that I believe semiconductors are the future for any form of technology innovation. I believe big tech companies are going to continue to do well in the long term of things. So why fight some uncertainty that I don't know where I can stick to the guns with the certainties that I do know? So I believe that increases, and to me, I look at everything in the form of probability, right? You know, it's very hard for me to kind of talk about it. But in my mind, it's always working of what has a higher probability of succeeding. In the long term, I have a higher probability of succeeding by pretty much doing nothing and just holding onto my portfolio and dollar cost averaging into these stocks. But also understanding that the risk is still there. That short term, my stocks could get hit pretty wild. So I think that's one of the reasons I'm not selling my portfolio at all.
Yeah, if if I had to sell my portfolio every time I heard bearish people, I think I would never have a portfolio, right? Because in the last, let's call it 10, 15 years or so, you have the usual bears, right? That every year it's the same thing. Every year gold will go up, the markets will crash. It's going to be the worst recession we've ever seen, etc., etc. The Great Depression. Well, someday they might be right, but a broken clock is usually right twice a day, and then the other times they are completely wrong. I rather be the other times than the twice a day. So just to quickly touch on the stagflation thing, it's basically stagnation with inflation. So you have inflation, you have high unemployment, and economic growth is basically stagnant. It's way worse in my eyes, and I think in a lot of people's eyes, stagflation is way worse than a recession. So it's the worst case scenario is stagflation, to be honest. So hopefully we're not going there, but it's always a possibility.
So Neil, I think this is probably questions we haven't answered yet, but I'm pretty sure many people might want to know. You guys aren't selling, but did you guys buy today? I did put money into the account today. That's a lot heavier than normal, and I did have kind of cash already available to me, so I did make some purchases. Mainly, Neil, it's going to be in kind of the big tech space and kind of the semiconductor space. Like the main players there are the ones I did purchase today. And I still have, I understand the market is going to go down. I don't know that. I believe volatility is going to continue. So it's not like I threw all my money at once. I think one of the best things is have that emotional control in your portfolio, right? I have like a what if you look at a balance sheet what I'm call a restricted cash account, where it's like only during certain times am I opening this vault to start to put money, and these is like a nice amount that can really increase my overall position sizing. And I start to dibble a little bit here and there. So I am buying. Today was probably one of my biggest buys in forms of like portfolio allocation. I've never given my overall portfolio value, but I think I added about at least 5% of my portfolio value in just cash today to make purchases,
And
which I
did
think
you
is a
make
hefty.
purchases?
Yeah, I did. I made purchases today, and like I said, mainly in the big tech space and mainly in kind of the semiconductor industry.
Okay, no, fair enough. I mean, I had I had a cash injection and I bought a little bit already this Monday. So some of the names have gone up and then are now back to the same prices since Monday or a little bit lower. I am planning probably. I haven't actually bought anything yet today, but I probably will. More of the same. Um, Probably more semiconductor names, more fintechs. Um, Someone said that Mercado Libre is up today. I saw that as well, which again makes sense. Latin American exposure. Brazil is only getting hit with 10%, which is the lowest. So it makes sense. It makes sense. I am. We've talked about that in another stream earlier today. It's not the time to start betting on speculative plays, right? It's the time to add to quality names and less speculative plays these days.
Yeah, I agree, Neil. I mean, that's why in like if you look at my watch list for um like my top, if I was to give like my top 5, top 10 watch list, it would be filled with like 100 billion plus companies, market cap, the $1 trillion. It would be filled with your Metas, your Googles, your Nvidias. It would be those big players. That I do believe those are the ones that have a healthy balance sheet, have huge opportunities to continue to grow during kind of a downturn, and have the greatest possibility of one destroying and outperforming the market, and still kind of investing in a lot of innovation.
There was here one comment. Apparently, Amit will have Tom Lee on at 3 p.m. today. Tom said Trump would cause a face ripper market move. Well, yeah, he thought there was a V-shaped recovery coming after April 2nd, which I thought was going to happen as well because of the uncertainty part of it. But I mean, it could still happen, but probably is going to take a little bit longer than what he expected. But we'll see. We'll see what he's going to say on at 3 p.m. Probably more of the same that he's been saying on CNBC since yesterday, or maybe he's gone on CNBC today as well. I don't know, but we'll see. I mean, like Jose said at the start, even the professionals that get paid, even the analysts, they don't know, right? Nobody has that crystal ball. They don't know all of these economic speculators, etc., projections. They're paid a lot of money to do their jobs, but they don't know. They're like they don't have that. They don't have that crystal ball. They think they know. They're making some projections. There is a margin of error, of course, but nobody really knows. And if someone is telling you that I know that XYZ is going to have, he's probably lying.
Yeah, I can't find the comment. Oh, here we go. I have a bachelor's in economics, and my best advice is to focus on companies itself, not macroeconomics. Do you know any rich economist? Very, very true. And then we have one from Martin, Neo. How much do we charge for this therapy session? The first few a year are free, but after that, we start charging. Luckily, hopefully, we only need like 5 or 6 a year throughout the long term of things. But yeah, this one's on the house, Martin.
Yeah, this is like a free trial. If you would like to upgrade later, you can always become a premium member.
Yeah. So Neil, you're not. Question. You mentioned you haven't bought anything yet. Are you thinking of
Today.
or what today? So you've made. All right. Um.
I mean, today it's still early, right? The market only
Yeah.
opened like a couple of hours ago. We
Let's
had
do it.
another, yeah, we had another live stream. We have this live stream. Um,
I think I was purchasing it during the other live stream, Neil.
That's why it didn't answer my question. Now I get it.
Yeah. Let's see. Any questions here? But yeah, so well said, Neil. Buy good companies, because Jose says buy bad companies.
Yeah, exactly. um, Jonathan says here, the problem no one is talking about is what Jerome Powell said. He deferred interest rates indefinitely based on tariffs. 2 to 3 cuts this year have been factored into the market. Is a big problem. I think only two rate cuts were factored into the market, which I still believed and still believe actually that it is too few of cuts this year. I think the Fed is already behind. If you, again, they're looking at data that is quite lagging. If you want to look at trueflation, we are already much lower. We're already at 1.2 or 1.3% or something like that. Of course, this whole tariff thing can change, but even if it adds 0.5, 0.75%, you are still lower than what the Fed is looking at today. So I still think they're behind and they're going to cut 2 to 3 times at least this year. Of course, a recession might force them to cut faster, remains to be seen, which means that the US government can refinance trillions of dollars of debt at lower rates, which I still think is the main goal here. Because this year there is a couple of trillions of dollars that should be refinanced, and if you can refinance it at the lowest rate possible, I think that's what they're doing right now, which of course is breaking the stock market, might break the economy in the short term as well. But again, we are not paid to speculate. This is not our job, but we can only make certain assumptions. But then again,
Wait, Neil, you're getting paid for this? Who do I need to talk to?
YouTube. YouTube, which apparently, I mean, Google being down 3% today might mean that people will stop watching YouTube. So I guess we're in the wrong sector here as well.
And I actually got a really interesting comment. It's in one of my last video. And it was like I like to talk a lot about long-term mentality, right? I think that is crucial. It's always important to understand the risk. But one of the comments was like, no one is. It's easy to talk about long-term mentality when you're as blessed or privileged or whatever, how some of you YouTubers are. But it's crazy to think that, right? Because I mean, us YouTubers, we during markets like this, we tend to get hit the hardest because I mean, typically views tend to go down a lot, ad money tends to go down a lot. For most of us, this is kind of like our main income. Like, for example, I ended up leaving my engineering job to be able to do this full time. No regrets at all. But I've prepared myself, right? I prepared myself to make sure I have X amount of cash available for me for next 6 months of expenses if, let's say, something bad happens. So I think when some of us come up here and say, hey, look, we're thinking of the long-term mentality, I don't think it's because we are privileged in any way. It's just that we were prepared because we have some experience. And I think maybe as new investors, this is something that we learn, new investors learn from experiences like this. I'm pretty sure we've been in down cycles, Neil, where we weren't prepared and we probably felt a lot of fear. But I think um, as we've gained that experience, we've learned how to be prepared. And now during downturns like today, I feel like every down cycle, I feel a little less emotional and fear than I did in the previous one. And it's because of that preparedness. So for long-term for new investors, obviously it sucks. But let me tell you, it's going to be better. Make sure to stay in the market and just learn from the mistakes that you made right now, because the next one you'll be prepared and be privileged enough to kind of have that knowledge about it.
Yeah, I mean, I don't like the privilege comment because I don't see, like, we worked to get into this situation. It's not like, oh, this came out of nowhere and now we're here talking and this is how we can actually live our lives. It took a while, and in 2022 we took a beating quite hard with the 2022 bear market. And I think the 2022 bear market is where I made the biggest mistakes previously to the 2022. It's when I wasn't prepared, right? I wasn't prepared for the huge crash that followed, because we went 2022, 2020, 2021, huge bull cycle, everything was going up, and you're not prepared to what's coming next. And what came next was basically a huge slap in the face for the next close to 12 months or so. So not only did the portfolio get hit, but the income got hit as well, because YouTube views went down. Some things were changing here and there as well. So today, I think I'm way better prepared, portfolio wise, income stream wise. So I don't, of course, it's a privilege compared to certain jobs. Of course, like we can do YouTube, we can do, we have partnerships. It's great. But we got here because I guess we're good at what we do. People like hearing what we have to say. And I guess we've made some good investments in the past, which means that we are comfortable dealing with these types of situations these days. I do want to also share a comment I got in my SoFi video yesterday, but someone that said that he bought a couple of thousands of shares, I think in May 2023 or something like that, which means that he's up around 120 to 130% today. But in that comment, he's like, yeah, it's been frustrating in the last couple of weeks and months. And I'm like, wait a second. in in less than 2 years, you're up 120%. How can you say that you are frustrated with the performance? You've got a performance that people dream of over 10 years plus. You got it in less than 2 years. So I think it's a lot about perspective as well. I think we just came off 2 years of over 20% year over year markets, like market growth 20% for 2 years in a row. I think we got spoiled. So, okay, now we're in April. We're getting hit. But I mean, I still think we're far away from the 2022 horror story.
Definitely, definitely. So we got some questions here. Um, what do we have here? Um, Matthew, what are your guys' thoughts on margins? Matthew says he doesn't use it, but I think a lot of people do. I'm investing my own cash. I don't need the cash in the short term. I'm not sure I want to go into debt if it goes bad. I think margin is that double-edged sword, right, Neil? I mean, I think it's perfect if you know how to time the bottom, but I don't think many of us are even able to time the bottom. It's very, very, very rare for me to ever touch margins, Neil. And if I ever get into that scenario, it's just like maybe I knew that I was going to get a nice influx of cash in the next 2 weeks or something like that. Like, let's say I knew a few dollars were coming in the next 2 weeks. And I was just like, you know what? I really like the prices right now. Let me just do it because I know I was going to put that money in regardless. But it would be very small amounts of my overall portfolio, let's say like 2 or 3%. It would never be anything crazy because Margin, when she calls, not the nicest lady, So normally I would stay away from it, but everything has a risk to reward. Everything is kind of like a double-edged sword. You need to understand that double-edged sword, but 99.999% of the time, I don't touch it, Neil.
Yeah, I mean, same here. And I think the fact that we went down so fast in the last month or so, I think I saw something from Interactive Brokers. Maybe they said it, that margin wise, they were almost at all time highs or something like that. The exposure, maybe that might have caused like the huge crash in such in such a short period of time. Don't touch margins, touch grass. That's actually a good T-shirt idea, to be honest.
It is. We gotta get some of these ideas. We get a lot of ideas from the viewers, Neil.
Yeah, I mean, we talked about this in private. You asked me how many kidneys does one need to stay alive? Because I'm, yeah, I think you have two kidneys. You can sell one, and I've looked it up an hour ago. I think you can get around 15 to 20K, which might be a very bullish thing for Transmedics. So who knows? Maybe Transmedics will suddenly see a huge influx of people having kidney transplants.
Yeah, yeah, Dan. So I mean, it's so new that we were talking about this just a few hours ago. Unflappable seems to be tapped into our little group here. Jonathan has 5 kidneys. Hopefully, not all his, but and if so, hopefully he got them legally.
but we're not judging here. uh, this could be an interesting. Hey Neil, maybe for you as well. What will be your DCA frequency in such cases? Such cases as today. Um, same as before. We had 2 green days this week, which was very strange. Today we have a red one. As always, I rather buy during red days than during green ones. Sometimes even green ones are fine. So DCA frequency, to be honest, if I like certain companies at this price, I'm not going to go all in, but I might add a little bit more than what I thought I would have before.
Yeah, for me, my DCA frequency, there are most of the time it stays the same, right, Neil? So I even though I run my YouTube hustle, I pay myself out every 2 weeks. And every 2 weeks I am married and and I have kids and obviously house and all that. So I have what's it called? A budget, right? And every 2 weeks, in that budget is a mixture of stock market investing, obviously all the bills, but another type of savings that we do is we want to buy our next house. So we do have kind of like a house investment fund. During days time like today and actually the past few weeks, what I do is my wife and I get together because obviously it's our money, and we start to decide that maybe the best use of our money is no longer to save in the house right now, is to inject more into the stock market. And that kind of fluctuates throughout the times when maybe the market I feel like might be a little bit too overextended. I'm like, you know what? Let's kind of slow down stock investing and let's kind of like fuel up house investing a little bit more, house saving a little bit more. So the frequency for me, the frequency stays the same, but that cost or the amount increases dramatically. And then days like today when I just feel very, very excited about having the prices down a nice amount, I open up that secret vault and just take a small percentage and add to my portfolio at a big chunk. But that doesn't happen. That doesn't happen on a daily basis because we've seen it before, Neil. Right? Things like this can last months, weeks, quarters. So if I was to do it every single day, that secret vault will be emptied pretty quickly. It may be every 2 weeks, every certain percentage drops or so on and so forth, but it's definitely not on a daily basis.
Yeah, no, I agree. I mean, technically speaking, if we are going towards a recession or something like that, housing prices might fall. So maybe you're going to get eventually a better deal out of skipping for a new house, waiting, and maybe housing prices go down, your portfolio goes up. Win-win.
One of these days, though, I'm gonna tell my wife, I'm like, you know what? Maybe we should get rid of that whole house budget, and just put it all on stocks.
Let's
But this might be the response that I get if I make that if I make that suggestion. But that's why it is crucial, right? I mean, it's this would be new money coming in. I'm not touching from that housing fund at the moment. That's because one of the things is we've talked about it before, right, Neil? Is emotion plays a big game. And let's say a housing fund. If I was intended to buy a house in the next six months to a year, I definitely wouldn't be putting it in the market right now. So yeah, there's the house budget fund that isn't getting touched. Just a new influx coming in.
No, agreed. Let's see. I think there were some questions about Micron and AMD. Micron, oops. So, I mean, to be honest, nothing changed, right? I mean, so far there are no tariffs on semiconductors. So the fact that they're down quite heavily today is already also a small surprise. But then again, I'm not surprised by the market's reaction to these types of things. They could get hit in the future, and they're probably getting hit indirectly because of tariffs. But company-wise, business-wise, still the same feeling about Micron and AMD. Nothing really has changed. Going into the next earnings season, remember Q1 is already over, so it's all probably about to be about guidance. What do these companies see after the April 2nd announcements and all of that? They have a month to prepare for the earnings call, so we'll see what happens. But all in all, semiconductors, I think we're going to see way more semiconductors in the future than we're seeing today. So
Yeah, and I think you mentioned it really good, Neil. I mean, does semiconductors haven't gotten hit with tariffs, um, and they're kind of excluded out of the reciprocal tariffs. I still don't know if they're. I think they're still part of the baseline tariffs that are happening in all the other countries. I think if I read those crazy tariffs, and we saw like Taiwan had some insane numbers. I think for semiconductors, Neil, it's now just that uncertainty, and that's what the market. I think that's what sometimes creates these great buying opportunities is the market is just now expecting somewhat that maybe consumer demand is going to slow down, that consumer demand is somewhat going to lead to less electronic sales, and and that's going to lead to less um, the revenue for semiconductor players, right? I think that's the biggest thing impacting, but it's just a lot of coulds and might happen. So it could actually just be nothing in the long term of things, and it could allow them to continue to beat revenue expectations. So still bullish in the long term. In the short term, it's just a lot of uncertainties based on what could happen.
I want to touch a little bit on the whole CoreWeave thing. I don't know if you've probably seen, right? Yesterday, apparently Google um, is in talks to maybe have an agreement with CoreWeave. So there's probably going to be that discussion now from investors. Oh, Nebius over CoreWeave or CoreWeave over Nebius. Different type of business models, I would say. I wonder what CoreWeave is doing today, because I think yesterday it went up. It rebounded quite rapidly, and right now, let's see, CoreWeave. It's still up this week, 42%. So it's now down 11% to $54. Okay, fine. It's up to you, right? Why did you buy Nebius knowing that there is CoreWeave, right? That's the thing. Just because CoreWeave is now public, which I think we all knew was going to happen eventually, um, did something change? Do you like CoreWeave's business more than Nebius? Do you like Nebius less because the stock price is down? Maybe more. What's the rationale behind that? I'm of course biased because I have Nebius now, so I still see no reasons why I should switch. But
Yeah, Neil, I mean, and I really like this from Jonathan. So a few people, I feel like most people are hearing kind of these Microsoft news and pullback. But Jonathan mentions here that CoreWeave is providing kind of the OpenAI database, or kind of like the infrastructure solution now for some of these. And I think this is what we're going to see with big tech now, Neil. It's like maybe they might be a little bit scared of investing themselves in infrastructure, but that money is still going to go somewhere. I think we're going to see things like Google, like Microsoft, like OpenAI. OpenAI, we saw made that big agreement with CoreWeave, and obviously it can go with Nebius as well. That maybe I don't want to spend whole capex on new infrastructure. I'll let you, CoreWeave, go spend it, and I'll gladly rent it out. For it, rent it out for it. Maybe de-riskify myself a little bit, but still have the infrastructure in place. It's just a leasing mechanism, right? And in certain aspects where maybe technology innovates at such a rapid levels, I think a leasing might be the best approach. Let's say I had a car, and let's say in this scenario, I can drive as fast as I want, right, Neil? If I had a car that goes 50 miles per hour, but then I know 2-3 years later, my next car can go 150 miles per hour, and I can still do it safely and everything. Don't think about road rules, but um, I would personally rather just lease that vehicle that does 50, because I know 3 years from now, the vehicle is going to be a lot better than the technology. And I think this is what is going to happen. But overall, there's still going to be a huge demand. They're going to be leasing it, and CoreWeave is going to be the big spender here, or Nebius, or whoever. So it definitely seems like big tech might be trying to de-riskify, but it doesn't really show much of a pressure, in my opinion, for the AI market. The spender is just going somewhere else.
yeah, I mean, and in the last 2 weeks, let's be honest, we haven't seen one of the big players say that, oh, we are going to need less GPUs. I think they're Sam Altman and all the rest have all said, we need more. If you have more, contact us. So this whole bear case scenario that, oh, they're overspending, there is not enough demand, I think it's getting pretty clear that there is a lot more demand than previously expected.
Yeah, and I'm seeing this one. So Davis O'Neill, I saw the Arizona plant is in mass producing, but not the 2 nanometer chips. Not sure about Nvidia's exposure or allocation to U.S. and Taiwan production. So Neil, I mean, I think it's also important to know that like it's not just with Nvidia's solutions. I think Jensen has mentioned is thousands and thousands of products. So it's also important that when they sell kind of these servers nowadays, I'm not trying to say it's completely bearish, but it's also good to understand that in these servers, you have so many different components, and these components come from different segments. Some of those segments not might not be in the exclusion list and could be getting hit with export. Regardless, I mean, I think Nvidia sells at a high margin. Regardless, that um, some of these prices probably increases won't mean too much. If I was to say, I wouldn't be bearish on it, but I wouldn't just say, hey, look, Nvidia has like zero exposure to any tariff risk. I think there's always room for some. But in regards to heavy margin hit or heavy pressure on maybe sales, I don't think that's in the crystal ball that I'm seeing right now.
And I think I've seen a post today about Microsoft uncanceling projects and things, and they said that they want to actually expand their data center footprint. So again, I'll have to find that post again, but the flip flopping around this Microsoft and leasing of data center space and all of that has been quite funny and annoying in the last couple of weeks. Yeah, did you hear? Did you hear yesterday? Wait, yeah, the Amazon to buy a TikTok news. It's not the whole of TikTok because I think Oracle gets the data side of things, or it's going to run the data side of things. Amazon the other side, and maybe Andreessen Horowitz put some money there as well. So, what do you think about this whole? I mean, do you own Amazon? I can't remember, or maybe you want to own
I
it.
don't own it. I mean, I do think one of these big tech players is going to need to buy it. Because I do believe, I mean, it's sad to say TikTok and all these social medias are a form of data harvesting, and that data harvesting can be used in AI solutions. So I do think it could be beneficial if I think if Amazon doesn't buy it, it could be, I could see Oracle buying it, especially since they kind of have that partnership with OpenAI, and OpenAI needs a social media platform, in my opinion, to be able to combat
Hmm.
against Google with YouTube and Meta platforms with obviously their whole social media. So, and if I don't know how I'd like it. I think it's necessary for some of these players to kind of have that data harvesting solution for their AI products. So I wouldn't be surprised if either Amazon, Oracle, or Microsoft, or maybe OpenAI with that $40 billion influx of money that they got, might think of doing something like this.
I mean, Microsoft. I honestly I don't see how they will be allowed to do anything these days with the OpenAI, with Activision. I don't. I don't know.
That's true.
I don't know how they do it. And Amazon, to be honest, and Amazon, it would make sense for them as well. It will also make their advertising side of the business a huge thing, right? Because if they have TikTok, that's just going to be a money making machine for them. Um, Plus, they can run the e-commerce side of things on TikTok as well. Um, Interesting. It's not something that I'm like, as an Amazon shareholder, I'm like, oh, I don't like this. No, actually, to be honest, it could make a lot of sense. It could make a lot of sense.
Um, and first, I wish most viewers were have the mentality of I just want to give a two shout outs to Matthew and Jonathan, because we had someone come out and say every YouTuber told me to buy SoFi, blah blah blah. I've learned that no YouTubers know what he's doing. But then we have Matthew here saying that, hey, look, YouTubers don't tell you to buy, they provide the information. If you want to buy it, you should do your own research. And kind of Jonathan kind of mentioned something the same. You have to be responsible for your own decisions. And I'm pretty one thing that I think lacks in the somewhat new investment community, not everybody, right? But I think normally, and I think just when you're entering anything, you always try to find the blame of something of why you make a mistake. And anything you do in life, I think once you have that mentality that everything is your responsibility and you're the decision maker, can make you a better at whatever, being investment, being whatever. But understanding your mistakes is usually step one of becoming better. So I think me and you, right, Neil, we just kind of discuss and share our information of why we like something. I don't think anyone here is paying me to make sure I chill you certain stocks because we need to hit some form of quota that this I feel like YouTube thinks that YouTubers need to hit this quota of, hey, look, they need to make me buy X amount of these shares, because if they don't hit that quota, then they lose their YouTubing gig or something like that.
Yeah, I mean, look, to be honest, unless of course we're talking about Poet, because then maybe we're getting paid $40,000 to talk about that company. But who knows? Who knows? But I highly doubt it. Um, no, I mean, when we talk, although the title might be very, very aggressive or something like that, or the thumbnail, our videos, especially for our channels, are information. It's information, it's news, it's like a diary, like how are we thinking about certain stocks, certain companies. If you like it, do your own research, and then if you decide to buy a certain stock that we managed to talk about, that's on you, right? I'm not saying here, I'm not, you're not paying me to manage your portfolio. If you are, okay, that's another story, but I'm yet to receive one paycheck from one of the viewers. So I, uh, I highly doubt that's the case. Second of all, we only hear the complaints when things are down, right? If SoFi was up 50%, I highly doubt I'd get oh, thank you for that. I highly doubt it. And even if things are down, which today most of the things are down, is it the end game? Is this the end of your investing journey? Probably not. So there's no point in complaining.
And this, I agree, Neil. And now, kind of, I think we've had a few questions on options. Mario, Jose, what do you think about December 19th, 2025 strike of $150? Nvidia calls premium is $5.50. I know market conditions isn't great. Buy fundamentally. Nvidia is super strong. What do you guys think? Too risky? Mario, I want to say I don't dabble in options too much. I do use them, and very small percentage of my overall portfolio. Let me say, most of the times I actually end up losing in options is when I end up buying calls. Just because the market is too risky. I do believe Nvidia will hit $150 in the future. Now, what happens in December 19th? Can we continue to hear more tariff talks? Can we continue to hear? So that's the riskiness. Normally, what I tend to do a lot is more the selling of options. If I sell a put, I tend to have that money ready in hand to be able to, if I get exercise the call, and if I sell a call, I tend to have those shares on me, because I don't like to have that margin gap or anything before it. So I don't like to do naked options. I like for it to be for me to have that collateral with me ahead. So options, I tend to not buy calls or sell or buy puts, just because the time of decay is a whole different game in that industry. But plenty of people have made money doing it, just not for me.
Yeah, I mean, selling puts is of course a strategy, right, to get that passive income from time to time. If you know how to do it well. Me personally, I'm not in the options game, although sometimes it can be very, very helpful, right? Especially maybe not in these types of scenarios right now, but selling puts in some cases where you're like, I really want to have that stock, but it's just too high. I want to buy it a bit lower. In the meantime, I can collect a premium. That could make sense. Um, I just rather own shares straight out. Like I think today I tweeted it out. I think today is very easy. In the last couple of days, it's very easy to differentiate between long-term investors and options traders. Like options traders are probably panicking right now because suddenly, oh, maybe their their calls or whatever are going to expire pretty soon, and they don't like the volatility. Long-term investors are like, I have nothing expiring anytime soon, so I have less stress, way less stress.
Definitely, Neil. We have this question here, Neil, coming in from SmackDown. How often do NVIDIA GPUs need to be replaced? And any idea on lifespan? Um, uh, so far, I think, how many years are we in the Hopper platform? Maybe 2 entering the 3 years in the Hopper H1, and I really haven't heard of kind of GPUs failing. And I don't know, SmackDown, if you mean the force of replace them because other components are better, or like let's say the next generation is so much better, or replace them because of some form of breakdown. Um, I mean, we've heard in the past that companies are still running the A100s, and some are even running the Voltos, which are 5+ years from now. There is a big difference, though, now, Neil, that most of the GPUs are kind of now running on a 24/7 basis, especially with inference. And that obviously will create a little bit more stress. So there is that uncertainty on reliability. But I'm going to guess, I'm going to put some faith that NVIDIA knows that a lot of these GPUs that are going to be coming in now are expected to be running at these 24, almost. I mean, Jensen mentioned his goal is AI factories, which are AI data centers that are running nonstop. So he already has this mentality that he needs to develop some form of item that has this reliability of running 24/7 for multiple years. So I wonder if that's already kind of in place with their quality assurance. I'm pretty sure there's ways to test that. But at the moment, we haven't heard of any breakage. Now, of replacing them because maybe the other product is better, the new products are definitely better, but you can always find plenty of use cases for the other ones. And it's just replacing old technology. There's still plenty of data centers, Neil, that don't have GPUs in them. They're still just CPU run. So you can kind of transfer that into those other data centers and so on and so forth. So I think we've seen like around 4 to 6 in their depreciation by some of these big tech players.
Yeah, I mean, and especially with the new ones, with the new rack sales system, um, it's easy to plug and replace, or replace and plug in, um, which would make it to have more sense to have it, because previously you had to change the whole thing. Now it's basically take one out, you plug the newer one in, you don't have to change the whole system that you've built out before. Of course, now that they're still building out huge data centers, it doesn't really matter much. But for the future, having those things plug and play is necessary. I do have two funny things, important things here. So one, Neil, once I make 10% this year, I'm buying you 5 AMDs. Thank you very much. Maybe that will cover my bet with the other guy. And then Unflappable Fox says, once I sell my kidney, I'll Venmo you some cash. Unfortunately, I don't have Venmo, but you can Venmo Jose and he will send me through PayPal. We're helping the whole PayPal ecosystem here, and maybe my shares finally, finally will go up.
Um, any reason why no Venmo, Neil?
It doesn't exist.
Oh my God, what do you guys have over there, Neil? Do you guys don't have AI? Are vehicles where you're at, Neil?
Um, Actually, no, people are still on horses here. No, but we
um,
have Revolut, so it's a bit like it's a bit of the same. It's a bit of the same, but no Venmo, no Cash App. Meta AI, yes, I told you this. Meta AI, yes, since last week.
and Neil, we're getting some great comments. I'm happy, and I'm
I'm
happy for
happy.
now. Yeah, I'm happy we're getting some great comments. It sucks sometimes reading. I'm not gonna lie. You need tough skin sometimes in this YouTube game if you read every comment. But we have right here Jose Najarro stock, and obviously Neil. This therapy session is making me more comfortable in today's situation. I do think having a community overall, Neil, it helps. It sometimes in my friend group, it's very hard to me to talk to anybody about investing. So it's fun to have this community. It's fun to do this with Neo, and it's fun to take these questions because it does help. Um, and then this period has taught me to embrace the volatility, not run from it, especially from helpful YouTubers like yourself. Thank you guys. Appreciate it a lot.
Yeah, I mean the other guy had the same name as an ex Chelsea player, American defender, Matt Miazga. Maybe it's the same. Who knows? But yeah, it's funny. You're probably the guy who there your friends are sending messages today about the stock market. I can check my phone now, and I have 5 messages that I have not read yet. I can tell you with absolute certainty that they're all stock market related, as if I know. At, oh, what are we buying today? Why is it down? We're like, yes, it is. If you want to know more, join us in the live stream.
How many corrections did you guys face during your experience? And if you can list the common things with what is happening today. Me, I've only been investing for maybe a little bit over a decade. So about maybe 10 to 13 years. How old am I? I'm 33. Yeah. So I've been investing for about 10 to 13 years around there. Um, I can't say I remember all of them, just because at one point, sometimes my portfolio was so small that it really wasn't a major impact to me, right? It's when I was starting off. But the ones that I remember the most, at least right now, because they're the most recent, are obviously that COVID crash that we experienced. And then the crash a few years after the COVID crashes, there was kind of like this heavy over inventory correction and then inflation and all this and all that and rates increasing. So that in the past, I think 4 years or five, we've seen at least two corrections from there. In 2018, we also the semiconductor market also kind of had like another tariff war with the semiconductor space where and kind of like the crypto mining phase as well, where we saw a lot of these. So those are the three major ones that I can remember in the semiconductor space that really put something in my overall mind. I'm pretty sure there's others that I would have experienced like since 2015, 16. But the other only thing that I can say is they were all different. The reason for them happening was a different scenario. What I think was the same is I made the most money buying during those downturns. And I was happy during those downturns when it sucked, buying, and my portfolio was really happy multiple years later. So it showed me patience. I think that's what I learned a lot from those is the patience. And things suck. It can suck, and it can suck for a long time. But if you stay with it, if you invest in great companies, the long term is definitely worth it.
Yeah, no, I agree. And I mean, just from what you just said, yeah, you're investing over 10 years in the stock market, and you could only name three times. What does it tell you? That the majority of the times things are better than what people fear. Um, Stock market crashes, corrections rarely happens. Rarely happens, especially if you are in the market for a long time. If you are in the market for, let's say, 20 years, I'd be surprised if you can mention 10. To be honest, I'd be surprised. Like you just said, 2018, the first tariff war, which also didn't really last that long. We had a pandemic, which I think is the worst of all the three crashes in the last couple of years. Um, and then the bear market of 2022. I think maybe 2014, 15, there was also a small period, something like that. But other than that, we cannot name because let's be honest, it doesn't even matter today. It doesn't matter today. We are much higher than where we've been a couple of years ago. Of course, same here. I mean, I started 2016, didn't really have that much money anyways. So the crash of 2018, okay, it sucked because my portfolio went down, even though it wasn't really worth that much. But at least you learn. Once you're in the markets, you learn. You learn way more during downturns than during bull markets, because during bull markets, who cares? Right? You see your portfolio go up and up and up and up. You don't ask any questions. When you see your stocks and your portfolio come down 10%, 20%, then you're like, okay, what the heck is going on here? And that's how you learn. That's how you learn. You go through this whole journey that everybody has to go through. Of course, today we have YouTube, we have these types of communities, we have these live streams. So a lot of people can share their experiences. We're now here, two guys talking, but many folks in the chat probably also are invested in the stock market more than us. So they can share their experiences. And that's how you learn way faster. Because if you were alone in your house, whatever, you're just looking at your screen, it's you and your thoughts, and your emotions are probably going to run high. You'll make mistakes. We're here, we're talking. It's not great to see the portfolio down a lot, but it is what it is. It's a journey you have to go through. But as you see, we can barely mention three times in the last 10 years. So I guess the other seven were quite good.
Yeah, and I mean, right, and there's so many in between. Individual companies also have issues where we've seen certain companies go down a nice amount, even outside of this. So, just experience and have that long-term mentality helps a long way, and learning from it. Neil, I do have a hard stop in 1 minute. I don't know if you have any other question that you would love to take. Um,
There was
Actually,
one.
I like this one, Neil. David Knight just started before Christmas. This is hell. Um, David Knight, hopefully, if you just started, it means you're young, really young. And I think I've said it before. I don't know if it was to you, David. I believe that you're going to be making more money 5 years, 10 years from now. So if you're just starting off, maybe you might be young, or even if you're not, I'm pretty sure you're still going to make more money later on. So use this as an experience. As right now, it seems like it sucks, but once you make more money, you're going to be able to use that experience to be able to make the right decisions. And you're going to learn patience, learn from the mistakes, and learn from whatever experience you're going to get here, that it is going to make you truly a better long-term investor for the future.
Yeah, thank you for the super chat, and congrats on the 3 points yesterday against Brentford. Last thing I want to say here, just because probably some people are not in the United States, like myself, are you concerned with foreign exchange rate risk for those of us not in the USA? So, of course, when the dollar was much stronger, it was better for us. But since we are in euros and the euros might be getting stronger or the dollar weaker, you can now start buying more US based companies for less euros, if that makes sense. Of course, if you want to sell your stocks and now go back to euros, you will be getting a hit from that as well. But if you look at the last 12 months or maybe a little bit more, maybe probably a little bit more, you can see Euro USD hasn't really done that much. To me, it's not that much of a concern, because eventually I expect my companies to do more than 2-3%, 5% or so that I might be losing in the exchange risks. So I am okay with that.
And before we end, David, he's 38. I hear you, man. Thank you. 38 is still young, man. When I was older, I felt like 33 was super old. I still feel like I'm in my early 20s, and I still believe that 40-year-old me is still going to make much more money than I'm making right now. So even though I've been in the market for 10 years, I still take every day as a learning opportunity. And I think Neil does the same thing. Every day we learn a little bit more. We learn from each other. We learn from you guys. We learn from just doing this on a daily basis. So 38 is still young, man. 38 is still super, super young.
Yep, 38 is the new 28. Anyways, we have to go. Very important to not overreact. Think long term. Don't look at your screen if you don't want to go out. There are other things, better things to do than just looking at a screen and the stocks being red. So that's all. We will be back Tuesday for more therapy sessions. Maybe it won't even be a therapy sessions. Who knows? Maybe by Tuesday it will be 3 consecutive days of green. So I mean, let's hope for that. Next Thursday is going to be an issue, actually, because next Thursday I'm in Greece, and I don't know if we can be live.
All right, Neil. Is it?
But we'll see.
We'll talk about it and